Are you thinking about buying your first home, but you just don't know which program is going to be right for you? Well, in today's video, I am breaking down my top 5 favorite first-time homebuyer programs. Now, you're going to want to stick around to the end because I've got a 6th bonus program, and if you qualify, this one's my favorite. Okay, let's define what a first-time homebuyer is. A lot of people think that's just somebody who's never owned a home before, and that's not really true when it comes to getting a mortgage loan. The definition of a first-time homebuyer for us is somebody who has not owned a home for at least 3 years. So you could have owned a home for 20 years, sold it 3 years ago, now you're considered a first-time homebuyer. Why is that important? It's important because there are some different requirements for first-time homebuyers and some programs that only you guys qualify for. For instance, on a conventional loan, a first-time homebuyer is only required to bring 3% down. A second-time homebuyer has to bring 5% down. That's a 2% savings on a $400,000 house. That's $8,000, and that's real money. All right, so let's get into it. My number one favorite first-time homebuyer program for a lot of people is the FHA loan. Now, FHA loans are not only for first-time homebuyers. That's actually a big misconception. Anybody can use them, but there's a reason why so many first-time homebuyers use this program. Firstly, they have lower credit score requirements. In fact, you can get a loan with FHA under 580 credit score. You have to have more down payment for that, but if you have only 3.5% down and you have a lower credit score somewhere between 580 and 620, there's really no option for you outside of FHA, and this is a good option for you. The higher your credit score, just like anything else, the better rate you're going to get, so it's still important, but it's a great option if your credit score is a little bit hurt right now. FHA also allows for higher debt ratios, so this is perfect for somebody who still has student loans or maybe is paying on a car or has some credit card debt. That stuff will keep you from getting other loans. FHA is still right for a lot of people. These loans also come with typically lower mortgage insurance payments as well as a lower mortgage interest rate. So that's a good thing. Your payment could be lower. Some cons to FHA, and you need to know about them, is that they do come with an upfront mortgage insurance premium that you have to pay. It's a 1.75% of your loan value that gets tacked on to your principal balance. You also are going to have mortgage insurance for the life of the loan. So until you refinance or sell this house, you're going to have mortgage insurance, and that's a big payment every single month. And lastly, sometimes it's a little bit more difficult to get an FHA loan offer accepted to a seller if they have multiple options. If you want more information on FHA loans, I've done a deep dive into them. I'll link to that below. You're going to want to check that out. Number 2, first-time homebuyer programs, state DPA programs. What is DPA? Down payment assistance. Every single state has one. I live in Georgia. Ours is called Georgia Dream. This is a statewide program that gives people access to money that they wouldn't otherwise have. I like to say it's sort of like having a rich uncle who's going to give you a 0% interest loan. So in the case of Georgia Dream, they give you, let's say $10,000 to $12,000 depending on the program, and at 0% for the life of the loan. When you go to sell that home or rent it out, you have to pay that $10,000 back. But just think about it. You've been allowed to gain equity on that whole house, and you wouldn't have otherwise. There are tons of other down payment assistance programs. Every location has them. You should know that there's a difference between a repayable and a non-repayable down payment assistance loan. They are just what they say. A lot of times they become non-repayable after a certain amount of time. So for instance, after 5 years, it's totally forgiven. There are even grants that are available, and I recently did one where I got an extra $12,500 for a first-time home buyer simply because of what she did for a living and her income level. That is completely forgiven because it was a grant and she got to keep that money and start a new life in a new house. Now, big important thing, not every lender offers every single program. So you're going to want to know what programs are available in your area and then ask your lender if they have it. Third program for first-time home buyers, not a lot of people know about this, and that's a USDA loan. These are 100% finance loans on rural properties. Now, there's a lot of intricate things that go into a USDA loan, but if you live in a rural area, chances are your mortgage lender is going to know about them. My company, we do a lot of USDA loans, and you have to know what you're doing when you're doing them, but when you get one, it's a great program. Nice thing about USDA, there's no down payment required, there's no mortgage insurance required, and they have relaxed credit score requirements compared to other loans. Now, there are a few cons that you need to be aware of. For instance, USDA takes into account all household income, and there are limits to the income that you can have in your household for them to loan to you. They have tougher debt income ratios, so if you do have a lot of debt, this program might not be for you. And there are some funding fees that do apply, like most first-time homebuyer programs. Now here's a tip. Even though it's for rural properties, a lot of suburban properties are starting to qualify for USDA loans. So you need to check the map and see if it's close for you, and if you're willing to live in one of those areas. There is a map online. You can check it out. I'll link below. Number 4, 203K loans. This is an FHA loan that is for fixer-upper properties. I love this loan for somebody who can get into a home so that they can start building equity faster, because anybody knows a first-time home buyer who has access to extra money to rehab a property, chances are you're going to start gaining equity a lot faster than you would have otherwise. This type of loan covers anything from a small budget, like maybe carpet and paint, all the way up to structural repairs. So this can be a real big win for you. If you see a diamond in the rough in a great location and you know it's a home run, now you can buy it and start making money. There are a few cons with the 203K loan, and you need to be aware of them. The house cannot be too far gone. They are realizing you're probably a first-time renovator, and they don't want you to have a project that is too difficult. Also, you have to work with the 203K approved contractors, and there is an intricate process to working with the contractors throughout the renovation, so be prepared for a lot of paperwork and also potentially a lot of frustration in that department. Number 5, conventional 3% down loans. A lot of people think they can't go conventional with their first home. That is not true. A conventional loan is also for first-time homebuyers, and you only need 3% down to have this loan. Notice 3% is even less than an FHA loan, which is 3.5%. The great thing about a conventional loan, sellers like conventional loans better. There's some misconceptions about FHA loans, down payment assistance loans, and sometimes you have to overcome those objections to a seller. With conventional loans, most people are familiar with them, so you don't have to worry about their perception of those loans and how difficult they are to get accepted. On conventional loans, the higher the credit score you have, the better the mortgage insurance rate you're going to get. So it can actually come in a lot lower than FHA if you have a perfect credit score. Now there's some big perks to conventional loans for people who are first-time homebuyers who make under a certain income limit. You can get some loan level price adjustments, meaning some rate adjustments on your mortgage rate that can save you literally thousands of dollars on your loan throughout the time that you own it. And if you make less than 80% of the area median income, there's even more options available to you. Another big benefit to conventional loans is that the mortgage insurance goes away when you hit 20% equity in your home. These loans can be combined with grants and down payment assistance to stack up the benefit for you as a first-time home buyer. Now, you stuck around for the video. I want you to hear my favorite, number 6, and this is only for people that qualify, but the VA loan is an excellent loan for first-time home buyers if you get the VA benefit. By far the easiest loan to get approved, in my opinion. You've got very lenient credit score requirements, very lenient debt ratio requirements, and the fees on VA loans, at least in my company, are extremely low. And all of that is to give back to our veterans who have served us in our country. As with all loan programs, you're going to want to know what are your options and how to compare that with every other available option that you have. Sometimes it might look better on paper or might look better monthly, but in the long run, and depending on what your goals are, another loan option would be better for you. So know what your options are and compare. As always, I'm available. I'd love to hear from you in the comments. What loan program did you use when you bought your first home? And if you need any help in the loan process, contact me below and let's schedule a call. And make sure to like and subscribe for more content, and I'll see you in the next video.